Good morning, everyone, and welcome to another weekend workshop. I'm so thrilled that you've joined us today to talk about empowered bookkeeping. I love this, not just bookkeeping, but empowered bookkeeping. And I feel that that gives us a little bit of encouragement as we're coming kind of the end of a year, getting set for a new year and deciding, yeah, how do I want to show up in 2025? And for me, at least, I love this idea of empowered bookkeeping. So excited to dive into this topic shortly with Katie. But for those I haven't met before, my name is Carrie Ramsey, and I'm the project manager for the We Can Project, which is led by Queen's University. And we serve women entrepreneurs throughout our region and, of course, beyond as well. And so it's great to have you with us. Why don't you take a moment in the Zoom chat? Let us know what your business is. If you have a web link to that, if you have a LinkedIn or a social media, just, yeah, go ahead and let us know, even if you want to tell us where in the world you're connecting from. I don't believe everyone's right here in the Kingston, Ontario region. So let us know where you're connecting from. While you're doing that in the Zoom chat, I'll take a moment to acknowledge that Queen's University is situated on the ancestral territory of the Huron, the Anishinaabe, and the Haudenosaunee peoples. And it is such an honor and a privilege to work with so many women Indigenous women entrepreneurs in the We Can Project. I'm meeting with two new clients this week who are running Indigenous-owned businesses. And I thought that what I would do is also I would put a link into the Zoom chat with our We Can directory. We get asked a lot about how do I find other women who are in this community? And so we had just recently started this We Can directory. And if you are in the Kingston region, Kingston, Belleville, Quinte, Prince Edward County, sort of that region we cover through the We Can project, and you're not on our directory yet, make sure you reach out to me. Not in the Zoom chat today, but by email. I know you all have my email. And let's make sure we can get you onto that We Can directory. We have over 100 women there now. Again, you can check that out. If you even just want to use the search tool to put in the word Indigenous, you can actually find Indigenous women entrepreneurs there as well. So yeah, reach out to me by email maybe later. Let's make sure that we continue to build that We Can directory so that folks know how they can hire the clients that are in our ecosystem. Thanks so much to you who are just arriving and introducing yourselves in the Zoom chat. This is a great opportunity for you to get your business visible in front of the women who are in this group. And so go ahead and take that opportunity to let us know where you're connecting from, as well as what you do, what your business is, and maybe where in the world you're connecting from. All right, thank you so much for joining us. Those of you who are just coming in, Katie is going to be delivering this workshop on a topic that's so important, so core to a business success. So Katie, I know you're struggling a little bit with a cold today, and the rest of us can raise our hands. How many have been through it already or are going through it today? But she is here. She's a trooper, and she is going to deliver to us, I think, something that could be a game changer in our business. So Katie, I'm going to hand you the virtual microphone. Thank you so much for being a part of this. And not only that, but for being a part of our We Can community. So thrilling to have you as a client. Welcome. Great to have you.
Awesome. Thank you so much, Carrie. So, like Carrie mentioned, I am struggling with my voice a little bit. I'm usually much more loud and upbeat than this is. So, hopefully, everybody can understand me today. I have a small child. My daughter just turned 8.5 months old, and she got her first cold. And then she proceeded to give it to me. So, I said, welcome to the next 10 years plus of my life, where I'm going to have to really work on my immune system. Um, so it gets better as I talk more. So I was actually messaging with Cheyenne, who's on the call before this, and I said, I spent the whole morning singing, hoping that it would just make my voice a little bit better. So hopefully it gets better as we go. But if you see me stopping, I've got some hot lemon and honey, and I've got some water. So I might be taking some sips of that during. But I just want to thank everybody for coming today. I've been in the business I've been bookkeeping now for 12 years. I was 21 when I started. I absolutely love what I do, and I love connecting with business owners, small to medium-sized business owners, and just sharing the knowledge that I have and learning from them and being able to empower them when it comes to their bookkeeping. Over the past few years, I've really realized that people struggle with, you go into business for yourself, for something that you love, a passion that you have, but there's all these different hats that you have to wear as a business owner. And a lot of people don't have training or understanding in those other things. So they either outsource it and then they don't understand they hire somebody to do it, but they still don't kind of understand it or why they need that person or what that person should really be doing. So my plan today is to share a lot of information with you. I apologize in advance if it can be a little overwhelming. Um, Feel free to reach out and book a call, fill out my intake form on my website, and book a call if you want more information. That's what we're here to do, is just to empower people and help them. So I'm going to dive in. First up, we're just going to talk a little bit about the overview for today. So basically, I'm going to go through the information that I want to share today. Is I'm going to chat a little bit about who I am, why I do what I do. I want to talk about the difference between a bookkeeper and an accountant, because I do feel there's going to be a lot of people registered for this webinar that are either brand new business owners. There might be some seasoned entrepreneurs and business owners in here. So some of this information you might already know, some of it might be new to you, but I really wanted to cover the basics as well as dive into a few different things. I'm also going to talk about the roles and responsibilities of a bookkeeper because um, newsflash, there's really bad ones out there. And I've came across a whole bunch of them that are not good at what they do. And they've actually really hurt business owners. And I've actually taken over businesses that were almost going to go under and weren't going to be able to actually operate due to decisions and some things that their bookkeepers did in the back end. So just understanding what a bookkeeper should be doing so that when you are hiring somebody, you have a little bit of you feel empowered, you have a little bit more knowledge of maybe the questions to ask and not just take somebody at their word, but actually get to know them before you hire them. We're going to talk about doing it yourself and done for you services. We're going to talk about some common questions that I'm asked, and at the end there's going to be Q&A, so you're welcome to ask any more that I don't cover. And then we're going to talk about some write-offs and how to expense track, financial reports that are essential for business owners. And then we're going to talk about the services that I offer, that my company offers. And then just to give you a little bit more information so that if you are looking, these are kind of the things you might be wanting to look for when it comes to hiring a bookkeeper. So next up, a little bit about me. So I'm 33 years old. I live in Napanee, Ontario. I'm originally from Perth, born and raised in the small town of Perth, Ontario, and grew up very country. My first job, I got to wear jeans and work boots to work, so it was great. I didn't have to worry what my hair looked like. It was fantastic. And at that job, I worked in the accounting department. I worked in the sales service. I worked in the parts department, and I got a really good understanding on how a business operates and how there's multiple areas of your business and how all of them interconnect, but how they also have to stand on their own. So I worked at a New Holland dealership. We sold blue tractors. I absolutely loved it. And I learned that you have your sales department, we had parts, we had service, we had all these different moving pieces that all had to make money on their own, but they were interconnected. And it really taught me that, there's so many different areas of business that I didn't want to just be a bookkeeper. I really wanted to grow and learn and be able to help business owners become better business owners and become entrepreneurs. And I really wanted to be a partner in business. So I started part-time at the age of 21. Absolutely loved it. And then I just moved into full-time in 2017. And then in 2021, I incorporated. I got married to my husband, Brandon. He's on the screen there in 2023. And then we had our first daughter this March. So not only can I relate to being a business owner and being a female entrepreneur, I can also relate to being a young mom with a kid home full-time while still working full-time. So it really, I'm able to connect to people on a really deep level because I've been through the things they've been through. As Carrie mentioned, we just did a rebrand. I find that bookkeeping and accounting businesses are so bland. They're boring. They're like cookie. I don't know. I don't mean that harsh to any other ones out there, but a lot of the accountants I work with, like they're just very, prim and proper, that typical version of professional. And I really want to put a different spin on it. I really want to become people's partners in business. So our core philosophy at my company with my team is that our purpose is to unlock freedom and focus for clients, making room for them to thrive in what truly matters to them. And that is different to every single person on this call. Success, the definition of success is going to be different for every single person on this call. You might be looking for time freedom. You might be looking for financial freedom. You might be, you might just want to make a little bit of extra money so you can stay home with your kids. All of that is okay, and all of that is successful depending on your goals and dreams. So my goal as a bookkeeper and a business owner is to support you in reaching your goals and dreams, not pushing what I think you should do onto you. So as a bookkeeper, I work a lot with accountants. So the first thing I really wanted to talk about with doing this webinar today is I really wanted to talk about the difference between an accountant and a bookkeeper. And the reason I want to talk about that is because I get asked that question a lot, or a lot of people will call me an accountant. And I'm not, I'm a bookkeeper. And there is a clear difference between a bookkeeper and an accountant. So I wanted to share that in case you're not aware. So an accountant is more for what I would consider strategy. So they're kind of the strategist of your business. They are somebody whose job is to inspect and analyze financial accounts. So it's a high level process. So what I consider for an accountant is somebody that you probably only talk to maybe a couple times a year, or if you have a pressing question, they're the person that takes your year end of your business and all your financial documents, and they do things like, they file your taxes, they prepare adjusting entries for any of your assets, things that you bought for your business, any additional write-offs that you can get. Okay. And then they also analyze the operations of your business and they'll make suggestions on to how to improve your business operations. And they'll also implement tax strategies. So an accountant will help you be like, okay, here's how much money you made this year. Here's all your other income sources. Should you take more from your company? Should you take less? If you're a sole proprietor, what's your income bracket going to be? An accountant will make suggestions on if you should incorporate your business. They're more high level. Okay. And because accountants work at that high level, they normally don't look at specific details of a business. So they won't look at like your month to month revenue. They won't look at how your business operates on a day to day level. They're really just looking at the business as a whole for your full financial year. And then they're taking that information to make recommendations and to file your taxes for you. Okay. And they are very, very highly regulated. So when it comes to an accountant, to be to actually be a certified accountant in Canada, you have to go through university. You have to take an internship. You have to do hours at an accounting firm. And then you have to write a ton of exams to actually become an accountant. So if you're looking for somebody to do your tax return, you want to be prepared there's lots of people that file tax returns out there. There's a lot of bookkeepers that file tax returns. However, I highly recommend you actually work with a certified accountant. And the reason I recommend that is because a certified accountant has to do continuing education every single year. They are required to do 30 or 40 hours per year of tax training. So they're up to date on all the new write-offs that you can get, all the new benefits, because every single year the government comes out with different different benefits for businesses and tax credits. Accountants have to be up on that knowledge. They are legally required if they are a certified accountant. Okay. So and then when it comes to a bookkeeper is more operations. Okay. And this is why I honestly love it. I had thought about pursuing being an accountant because I love what I do. And then I realized that the lifestyle of an accountant is normally an office Monday to Friday. And then in tax season, they're working 60 hours a week. And I realized that that wasn't the life I wanted and that I could live my quality of life that I wanted as a bookkeeper. And what I get to do, which I think is amazing, is I actually get to work with business owners day to day. So I get to work in what I would call an operational role with a business owner, meaning that I get to keep their records on a day-to-day basis. So I get to help them make decisions that help them real time, not at the end of the year when they're doing their taxes. Now, both of these roles are extremely important, extremely important. However, they're different. So not one person is going to be able to do both of them or should do both of them. The other reason that you would consider having a bookkeeper and an accountant is so that you have double sets of eyes on your books. So if I'm a bookkeeper and my process involves recording all the transactions that come in and out of your business every day, making sure your paperwork's organized for year end. I'm going to produce monthly reports so that you can review your financials every single month. I'm going to be, somebody you can depend on, you can talk to about ideas for your business, ways to track new revenue, what types of expenses you have. That's all things that I'm going to be able to help with. But then I'm also human, which means I make mistakes. Okay. So if you have an accountant that you then pass your books that your bookkeeper kept up to date to your accountant is now going to review everything I did, which is what you want as a business owner, because then you get two sets of eyes on your books. And then the accountant is going to file your year end. Okay. So that's the difference when it comes to the specific roles of an accountant versus a bookkeeper. But then what does that mean for client involvement? So an accountant is involved at that high level, that 1 to 2 times per year, like I mentioned. They're doing, tax planning. And then when it comes to that bookkeeper, that's that daily. So a bookkeeper is somebody that you should have regular contact with, whether your business is small enough that that could be quarterly, whether you're large enough that that's monthly. I have clients that I'm actually in contact with every single day. Um, and those are just larger businesses that need a little bit more support. So when it comes to client involvement, when it comes to looking for help, your first person that you're going to reach out to as a client, as a business owner, is going to be your bookkeeper. And then if your bookkeeper can't answer it, because that's probably included in the scope of work that you're paying your bookkeeper for, then your accountant is the person that they pass stuff on to if they don't know what that, like what answers, like they're not able to answer that question, you're going to pass it on to an accountant. Okay. So then that's where we come back to just certifications, which I already touched on a little bit. But accountants are highly regulated, bookkeepers are not. And this is where I'm going to warn everybody on this call. If you are, so bookkeeping is highly underregulated industry, meaning that no formal training is required to market yourself as a bookkeeper. Any person on this call could wake up tomorrow morning, decide they want to start a bookkeeping business, create a website, and start marketing and advertising for clients. It doesn't mean that you have any idea what you're doing, but legally you can do that because it's not a regulated industry. Now, you can go to college. I went to college for office admin and I really loved the accounting courses. You can do online courses and get accreditations by different groups. So, like in Canada, we have the Canadian Professional Bookkeepers, so CPB, which is like the Certified Professional Bookkeepers of Canada organization, which provides support and community for bookkeepers. And then you can get, little letters at the end of your name that you're certified by that organization. However, to be a bookkeeper, you don't have to have that formal training. And this is where my warning comes out to everybody is I really highly recommend if you're looking for a bookkeeper in your business, I highly recommend that you get to know them. Don't just meet with them once and hire them. Ask them questions, get to know, like, and trust them, find out their experience. I was very fortunate that I was trained when I got my first big girl job out of high school and college. I was trained by a woman who was self-trained, but she had 40 years of professional experience in bookkeeping with multiple businesses. So all of my training and education came from experience. It came from somebody who didn't have a college or university degree, but was constantly learning and growing. Okay. So my one recommendation would be do your due diligence and really get to know the person before you hire them because you're giving them a lot of access to a lot of things. And if they don't do a good job at your bookkeeping, it can really hurt your business as a whole. Okay. So then next up, I just want to do a quick poll. I know Carrie created it for me, but I'd just like to get some feedback on right now as a business owner for everybody that's on this call. Do you have an accountant? Do you have a bookkeeper? Do you have both? Or are you currently kind of doing it yourself? Okay. So we'll give it a few seconds here.
Hopefully you can see the poll on your screen. If you're driving, don't do the poll.
And I apologize, my voice is slowly getting a little better, but
You're doing
we'll
great.
just,
You're doing
we'll
great.
just keep drinking the honey and lemon. It'll be great.
This is real life. Let me tell you, welcome to real life, real business.
Oh, and the amount of times that I have my daughter, I was able to give her to my sister-in-law today, but the amount of times that my daughter sits on my lap during work calls,
Good for you.
she's getting really good at it. She's going to be great. But
Okay, we're at 73% respondents. I
perfect.
think that's probably where we're going to land at.
Awesome.
End the poll, and I'm going to share the results. Hopefully everyone sees the results. I'll let you take it from here, Katie.
Perfect. Okay. So it looks like right now on the call, about 40% of people who answered currently have an accountant, which means they don't have a bookkeeper. So they're either doing it themselves for the bookkeeping or they're allowing their accountant to do it for them and do their bookkeeping at year end. And then it also looks like about 47. So the largest percentage on the call is currently doing it themselves. So a lot of the rest of the information I share is probably going to help you in regards to doing it yourself and maybe thinking about outsourcing it or thinking about getting a little bit more training on how you're doing it to better prepare yourself and your business for financial success. Um, okay, so the one thing I would say to everybody on the call that answered that they currently have an accountant, but they don't have a bookkeeper, is you are likely paying a lot of money for your accountant to do your bookkeeping for you. And if you're not allowing a bookkeeper to help you month to month, you might be missing opportunities to actually make changes in your business, little tweaks to actually improve your sales. So, for an example, I'll share a little story. I have a lot of clients that are in the construction industry. So, a lot of those, they're a lot of men. They like to just drop their paperwork off every month and not deal with it. They just turn a blind eye to it. And I'm able to, on a month to month basis, watch their revenue streams, where their money's coming from and where their money's going from. And the amount of times that I have found tradespeople that overbill. So they're paying way too much money for their services from what they were quoted. The amount of time I've found additional charges for things they didn't sign up for. And then the amount of time that I've been able to give them advice on their advertising and their marketing because of their revenue streams. So when it comes to your financials, and we'll get to that when we talk about financial statements, is what happens when you're able to make real time decisions in your business. You're able to make shifts and changes instead of doing it every year. You're able to make monthly changes in your business that's going to help you maybe stop doing something that you're wasting money on, or start doing something that's going to increase your revenue and increase your profits. So one of the things that I do as a bookkeeper is gross profits. How much money are you actually making from your products? So having a bookkeeper might be a really good investment for your business. Okay. So then we are going to dive on to, let's dive next up. We're going to talk about the rules and responsibilities of a bookkeeper. Okay, so we're going to talk about what a bookkeeper should do for your business and the value that they will add. And if you're doing it yourself, don't feel overwhelmed. Just know that there's a lot of things that you may not understand how to do. And then I'm going to give you some resources at the end that will actually help you if you're doing it yourself, and things that you can implement that are going to make things easier for you. Okay. So the core tasks can vary depending on the scope of work defined in your engagement with your bookkeeper. There's standard tasks that every bookkeeper should complete. And then there's optional ones depending on your bookkeeper's knowledge level and experience. So some bookkeepers will also provide services that typically do not fall under the roles of a traditional bookkeeper. That's me. And that comes from my love of business, and it comes from my love of money. I absolutely love money. And money can be a very taboo topic for a lot of people. It can be very scary. A lot of people don't want to actually share their money and things that are going on with their money. And I personally absolutely love digging in and getting to know business owners so that we can actually tackle the core problem, the root of why they make the decisions they make when it comes to their finances and their business, so that we can help change that. So it's like that holistic approach to business. So not only am I a bookkeeper, but I also am focused on your business as a whole. Okay, not all bookkeepers have that skill, and not all bookkeepers should, because that's not the role of a bookkeeper. So that's the other thing when you're maybe interviewing or looking for a bookkeeper, is what's the scope of work that they're actually going to complete for you, and what's the investment that you're going to make for that. Okay. So traditional bookkeeping roles, when you're a bookkeeper or you're doing the bookkeeping for your business, you are responsible for categorizing and matching all the receipts for your business. So every dollar that comes in and out of your business, you're responsible for keeping track of that. Where did it go to? Who did you buy it from? Did you pay tax on it if you're registered for HST? You also, as a bookkeeper, need to upload outside data. So a lot of small businesses use Square, Shopify, PayPal, Stripe as different ways to track. They might use Shopify for online sales. They might have a Square terminal at their retail sales, at their actual retail store, their brick and mortar. So one thing you also have to do is pull data from all those outside sources and input it into wherever you're keeping track of your accounting. So whether that is using software, or whether that is in a spreadsheet, or whether sometimes it's literally just a folder that you hand to your accountant at the end of the year. So some of the people that are doing it themselves might literally just be putting all their receipts in a shoebox. And I've seen that. I've had clients drop off shoeboxes full of paper for me. And there's nothing wrong with that. Okay, it's a place to start. The other responsibility of a bookkeeper is managing AP and AR. So what that means, so when I say AP, that's accounts payable. So accounts payable is who do you owe money to? And what is your cash flow out every single month? And then AR is accounts receivable. That's another thing that a bookkeeper is extremely helpful for. And another thing that using software is extremely helpful for is keeping track of who owes you money. I've worked with a lot of business owners that will send out invoices, but then they don't keep track of when those invoices get paid. And they actually have, like, I have one client who had over 6 figures in outstanding money that they didn't even realize was outstanding because they weren't tracking it. So that right there, hiring a bookkeeper and having somebody come in and look at your bank statements and be like, okay, I don't see that money coming into your bank account. Where is it? And then questioning it, they were like, oh, well, maybe they didn't pay. And then we were able to reach out to all of these clients and collect a lot of money. Okay. So that means reconciling your accounts. As a small business owner, if you are a sole proprietor, you are not legally responsible. Like, you don't legally have to have a separate business bank account. You can have a personal bank account and operate your personal stuff and your business out of it as a sole proprietor. I do not recommend it. And the reason I do not recommend it is because if you need to review that bank statement every single month to make sure you've accounted for all the expenses. So if you have a separate bank account for your business, it's easy to go through that statement and to see what type of expense they were, and to understand that those were all your business expenses. Okay. And then the other thing a bookkeeper is going to do is going to review your profit and loss report with you every single month. And they're going to create monthly financial reports. They also might do payroll for you. So if you have employees, they'll do your payroll processing. They file your HST and your payroll remittances. And depending on the type of business you're in, you might be obligated to pay WSIB. And they also will file and pay the WSIB for you. So WSIB is Workplace Safety Insurance Board of Ontario. So that is anybody that has employees, or anybody that works with other commercial businesses. You actually have to pay for workplace insurance. So if one of your employees gets hurt on a job, WSIB comes in and pays for that. Okay. So that's like the core responsibilities of a bookkeeper, and it can be extremely overwhelming. I know that. But those are the core things that your bookkeeper should be doing every single month, or you as the business owner should be learning so that you're able to do that. Okay. Next up, we're going to talk about do it yourself versus done for you services and deciding what's right for your business. Okay. There are some businesses that should be doing it themselves. And this, I'm going to give you guys an assessment that you can actually do on your own after the call. And you can kind of determine if you should maybe look at outsourcing it, or if it's something that you should continue doing yourself. Okay. So doing it yourself or done for you is going to come down to a few main considerations. So as a business owner, you're going to want to think about these things. Number one, you're going to want to think, what business life stage are you in? And what goals do you have for your business? And what I mean by that is, if your goal is, I have a client whose goal is just to make $50,000 a year selling her candles so that she can stay home and raise her kids. That's perfect. That is a beautiful goal. That individual might not need help with their bookkeeping. They might have the time and the resources to do it themselves. Okay. But if her goal was to grow a multi-million-dollar candle company, she's going to want to outsource her bookkeeping probably as soon as possible to free up her time so that she can focus on marketing her business. She can focus on making her physical candles. And then, so her goals are going to be different than if she only wants to make a little bit of extra money on the side. Okay. And there's nothing wrong with either one. It's both. It's beautiful. The second thing is financial leverage. I understand that a lot of new businesses, and a reason that probably a lot of you are maybe doing it yourself, probably comes down to money. Okay. And I would be very interested in having a call with people that are doing it themselves and it comes down to money, because one, and this might upset a few of you on the call. It might, and I'm sorry if it does, but what is the value of your time? What is an hour of your time worth? Because if you hire somebody as a small business, your bookkeeping might only take me 4 to 5 hours a month, but it might take you 10 or 15. So would you be better to outsource that for a few $100 a month and to pay somebody to do it and give you the peace of mind and to help educate you and empower you on understanding it, but not having to physically do it yourself, and free up that time so that you can market your business, or you can network, or you can create more of your products and sell it. Because you're the technician of your business, and you have to be doing the things that move the needle forward. And that is why bookkeeping normally gets put to the last for small business owners, because you're working on the things that put money in your pocket. However, you can find a lot of money when it comes to having somebody do your bookkeeping, because they're going to find things like the people that haven't paid you. They're going to find things like the areas that you're spending money that's not making you an ROI. It's not giving you a return on your investment. So the investment into a bookkeeper can actually move you forward financially in your business. And then the third thing that you have to really consider is time and energy. We only have, so I learned this when I first became an entrepreneur, and we only have 168 hours in a week. Every single one of us on this call have 168 hours a week. We get to decide what we do with that 168 hours. Now, we probably try to sleep 8 hours a night. So that's what, 56 hours a week gone. We probably try to spend, a few hours a day with our family. So there's probably another 20, 25 hours a week gone. And then, we want to clean the house. And as female entrepreneurs, we probably feel responsible for taking care of everybody in the house. So where we only have so many hours left to focus on our business and actually work on creating and reaching our goals and dreams. So you've got to really think about your time and energy. And is it better for you to do it yourself, or is it possible for you to outsource that and free up some time and energy so you can spend that time with your kids, or you can do some self-care, right? So those are the three things that I'd really consider. And then I'm going to share at the end of the call, I'm going to share a PDF document with everybody. You can download it. And it basically just goes through all of these different areas and asks a few questions about your current life and your business and what time you have available. And then it just gives you some options at the bottom of kind of like, should you do it yourself? Do you have enough time? Do you not? Do you have the knowledge? And then it might just give you the opportunity to kind of look at it, sit with yourself, sit with the truth of what that shows you, and then be like, I need to schedule a call, or I need to learn more about this. Maybe you just need to learn more about bookkeeping so that you can do it quicker, right? And I'm not against people doing it themselves. It's just the knowledge that comes around with it, and it's feeling empowered and confident in doing it, and then not wasting your time and not spending hours and being stressed out on something that you're not feeling that you can confidently do. Okay. So next up, we're going to go through some common questions. And these are just ones that I hear a lot. In the last 12 years, I've heard many times, and I've been asked a lot. I'm not going to go into a ton of detail into every single one, just for time's sake. However, what I am going to do is everybody is welcome to fill out my intake form and book like a 30-minute free consultation call, and I can answer specific questions for your business. If that's something that you're interested in, we can book it over the next 30, 60 days. And I would be able to just answer some questions that are specific to your business for about 30 minutes free, no investment on your part other than your time. Okay, so let's start. I've got 10 of them because I thought 10 was a really even, nice number. I could have put more, but I figured 10's overwhelming enough. So the first one that I want to talk about is sole proprietorship versus corporation. Okay. So as a business owner in Ontario, and well, Canada, I'm not sure outside of Canada what the rules are. You have two choices when you go into business. You can be a sole proprietorship, which could also be a partnership if you have a business partner, or you can incorporate your business and become a corporation. I get asked all the time what business owners, what they should do. Should they be a sole proprietorship? Should they be a corporation? When should they switch? What's the difference? What does it mean? Simply, here's the gist. When you're a sole proprietor in Canada, what that means is that you are taxed, your income tax is taxed on the net profit of your business. So quick numbers. Let's say you do $100,000 in sales and you have $50,000 in expenses. Your net profit as a business is 50 grand. Okay. As a business owner, when you file your taxes, you are going to have to pay income tax on an income of $50,000. It doesn't matter if you have that money sitting in your bank account to use it for next year for business expenses. It doesn't matter if you don't have that $50,000 and you've invested into assets in your business or you've pulled that money. It doesn't matter. The government does not care. The government is going to calculate your income tax on having earned $50,000. In Canada, the marginal tax rate for earning about $50,000 is probably about 36 to 40%, which means you are going to owe the government 36% of that 50 grand in income tax. Okay. That can be really overwhelming if you haven't put that money aside, which is another thing that a bookkeeper can help you with, because a bookkeeper can kind of predict based on your sales what your profits are going to be and give you an idea of how much money you're going to owe in taxes so that you can start putting money aside. There is nothing worse, and I mean nothing worse than owing the government money. And I speak from that in experience because I did it. The mistakes that I talk about are the things I did myself. Even running a bookkeeping business, I didn't pay the government because I wanted to do something and pay myself. And I had other things I wanted to do. And then I owed the government money. And there is nothing worse than owing the government money and having to pay it back over time or pay interest on it. And the stress that it puts on you is not worth it. So having somebody help you understand that. Now, as a sole proprietorship, your money is your money. And what I mean by that is any income you earn as a sole proprietorship, you can pull that at any time because the government's going to tax you on it anyway. If you decide to incorporate your business, your corporation becomes its own entity. So Katlyn Alyssa Inc., my business, is its own person in the eyes of the government. It is its own third party that has shareholders and has responsibilities as if it's its own individual. Okay. What that means, though, is I get to pay a lot less taxes. My tax rate is much lower. But it also means that I can't pull money whenever I want unless I want to pull it as personal income. So both of them are beneficial for businesses. I was a sole proprietorship for about 10 years before I went to a corporation. There are pros and cons with everything. And one thing that I would like everybody on this call to take away is that no matter what decision you make in your business, everything you do is a double-edged sword. And the reason I say that is there is always good and there is always bad. There's pros and cons to every single decision you're going to make in business. If you want to, for example, make more money, you're probably going to pay more in taxes. There's your pro and your con. If you want to invest more time into your money or more time into your business, you're probably going to lose that time somewhere else. So it might not be spent with your kids. It might not be spent just sitting on your back couch or back porch drinking a coffee. There are pros and cons to every decision that you make. So you need to get very clear on what are your goals? What do you want? What lifestyle do you want? What is your why? And then you need to anchor in on that. And then you need to build your business based on that dream, that outcome, that goal. Whatever you want, you then implement pieces to reach that goal and to move that needle forward. And I'm currently doing that myself. I have a business coach that's helping me write some of my own problems because I am not perfect and I make really bad decisions as well. So when you have a sole proprietorship versus a corporation, there's pros and cons to both. And I would highly recommend you learn what you have, what the pros and cons are. And then I would recommend that if you're thinking about one or the other, like if you're on this call and you haven't actually started your business yet and you're thinking about it, I would recommend you research both. And then I would recommend you speak to an accountant about what would be best for you tax-wise. Okay. Question number 2 is how often should financial records be updated? There's no easy answer when it comes to this question. I wish there was. I wish there was a simple cookie cutter explanation that I could give business owners, but the reality is it depends on what type of business you're in. It depends on how volatile that business is. It depends on how quick you have to make decisions to shift and change in that business. And it also depends on how much money you're making. So I have clients that I literally update their financial records every single day. I have other clients that I do every 3 months. And it really comes down to individual business needs. So I would highly recommend you think about that and think about, like if you're in the restaurant business, your financial records should probably be done weekly. Because if the cost of let's say you're in a restaurant and the cost you're buying your food from Cisco or Finley or one of these companies, these distributors, and let's say they increase their costs and don't tell you, or you miss the memo that they increased the cost. If your records and your financial records are not being updated on a regular basis, like weekly, there's the potential that you're not going to increase the sale, like the revenue, and you're not going to bill more for your product. And then the gross profit, which is the difference between what you sell your product for and what you pay for your product, that gross profit's going to go down. And that's going to directly negatively reflect on your profit of your business and how much money you put in your pocket. So now you're putting more time in and not reaping as much as a reward. So depending on the type of business you are in, depends on and how busy you are, depends on how quickly and how, like, basically how often your record should be updated. Okay. And at the end, write down any questions about these or anything you have about your specific business, because we'll have time at the end as well for me to actually answer any specific questions on any of these. Number 3, the best way to track your receipts. So I'm actually going to dive in on the next slide in regards to software that I use. I highly recommend software or automation. As much as there's a lot of scary things about AI, Cheyenne, who's on this call, has actually taught me to embrace AI and to actually use it in my business to free up my time. It still scares me in the sense that, like, I think about like robots running the world, but I digress. So when it comes to tracking your receipts, the one thing you have to make sure is that you keep them. So CRA regulation is 7 years that you need to keep your business, keep your receipts, so that if they ever audit your business, that you can actually, if they come back and decide to audit you, you have to produce those receipts. If you cannot produce your receipts for your expenses, they will make those expenses invalid and you end up paying more money in income tax. So I highly recommend, so whether you want to have a folder that you put them into, or whether they're all digital and you have a folder on your computer, or whether you want to use a software that I will recommend, you just need to make sure you keep them and do not lose them. Okay. Expensing, categorizing expenses. I'm actually going to share with you guys at the end. I'm going to share with you a Google worksheet that I've created. I'm going to share it with you guys for free. Basically, what you can do is put in all the different types of revenue and expenses you have in your business, and then you can put every receipt in, and it will actually track it all for you. It'll track your HST if you're charging HST, and it will also track, basically create a profit and loss report for you in Google. Okay, so I'm going to share that with everybody on the call. And then that way, if you're not using any system at all right now, you could start with that. And then eventually you could upgrade to maybe using some accounting software. Separate bank accounts. So like I said, if you're a sole proprietorship, you're not required to have a separate bank account for your business. As a corporation, you are. I highly recommend, no matter what size of business you are, I highly recommend you have a separate bank account. And the reason I recommend that is it just makes it so much easier to separate your business expenses from your personal. And I'll also share, because I'm very transparent and vulnerable and I'm very honest. One of the reasons that I incorporated my business a couple years ago wasn't for tax advantages like most people do. The reason I incorporated my business is because as a sole proprietorship, I was spending too much money. I like to spend money. I have an emotional attachment to spending money. I love the dopamine hit that I get when I spend money. It makes me very, very happy. And I've done a lot of inner work to recognize that that's not overly healthy. And I've also done a lot of work in recognizing that for my business to thrive, I needed to stop spending all of the money on myself. So what that meant for me is I went from a sole proprietorship to a corporation because it forced me and it slapped my hand and it made me treat my business like a business instead of my personal bank account. And that was game changing for me. Absolutely game changing. Now, would accountants recommend that? Probably not. But that is what I needed to do to force me to stop blowing all my money. Okay. So having separate accounts and keeping that money separate might not be enough for you. You might need to do what I did and actually take the step and jump in. But at least keeping it separate allows you to maybe have a little bit more cash flow management on making sure you have enough money to pay your business expenses. Because that's the other thing I would do. I would have all this money come in at the beginning of the month, and then I would buy a bunch of stuff for myself. And then at the end of the month, I'd have business expenses and I wouldn't have any money to pay it. And I work in bookkeeping. And that's where I learned that it doesn't matter what industry you're in. It doesn't matter how old you are. It doesn't matter. What matters is your habits, and how you do one thing is how you do everything. So if you have bad money management problems on your personal life, you're likely going to apply them to your business. So I highly recommend getting some accountability and getting a little bit of help when it comes to managing that, and a little bit of coaching and consulting maybe to help you change those habits so that you don't keep making those mistakes. Okay. What is the difference between profit and cash flow? This is an extremely important one for small businesses. A lot of small businesses will look at their profit of their business, which is your revenue minus your expenses. They will look at that and they will say, okay, well, I made 50 grand this year. Where is it? Because it's not in my bank account. So, and I'll dive into this on a slide coming up, but profit is what you pay taxes on. Cash flow is how much money you have in your bank account. Because every business transaction doesn't affect your profit and loss report, it means that you can't look at your profit and loss report as a guiding light to how much money you have in your business. So what that means is you have to have two different types. You have to look at your cash flow, money coming in minus money going out every month. And then you also have to look at your profit, because your profit's what you pay taxes on and shows you your gross profit for your business. But then your cash flow is the actual physical money that you have in your bank account for your business. Okay. Payroll. So a big one that I get asked is payroll. A lot of small businesses, you start out, you're a solopreneur, it's all you. And then all of a sudden you're getting, your sales are growing up and you're starting to make a little bit more money. You want to start freeing up some of your time. So you decide to hire a part-time employee. So that part-time employee is a full business write-off for you. It helps lower your profit and it helps lower the expenses in which you're going to pay, or it helps lower your profit in which you're going to pay taxes on. The hope is by hiring that employee, it's also going to grow your revenue, because if you have more help, you should be able to produce more and you should be able to make more money. Everyone gets overwhelmed with payroll. Every single business I've ever taken on and helped with their bookkeeping gets terrified about hiring somebody because it seems so overwhelming. I want you to know that if you reach out for help, the reason I have this question on here is I can usually onboard an employee for a client within a half hour. It's 2 forms, it's registering with the government, and it's having a payroll software set up so you can run their payroll. Those are the only things you need. So if you're on this call and you're at the point where you think you want to hire somebody, but you have no idea what to do, don't be overwhelmed and don't allow that to hold you back from taking that step forward. Just reach out to somebody and ask a few questions and maybe get a little bit of guidance on how to do it right. Because the next thing comes is payroll remittances. So as you pay an employee, you have to deduct their CPP, their EI, and their income tax. And then you have to give that money to the government every single month. When you need to have that money. So you need a little bit of guidance on how much that's going to be and put that aside into a separate account so that you can pay the government. So the one thing about paying the government is it's called trust debt. So payroll and HST is called trust debt with the government, which means the government is entrusting you as a small business owner in the country of Canada to collect money on their behalf and to then give it to them. That money is not your money. So as a business owner, especially with something like HST, I highly recommend you put that aside, because that money isn't your money. It's actually the government's. And you need to keep, and if you think of it that way, if you change that thought process in your head, it'll make things so much easier for you, because instead of you looking at your HST like, oh, I got to give the government money again, you're going to look at it like, oh, that's the money I've collected for the government. I just got to give it to them now. They're only asking for it every quarter or every year. So I just highly recommend changing your thinking when it comes around payroll, because adding employees to your business is game changing. Over the past 2 years, I've added 3 part-time employees, and it's allowed me to go from working 50 to 60-hour weeks to working to 25 to 30 hours a week and still have my income going up. That's the power of actually leveraging other people's time to make your business money. Okay. So I highly recommend you just don't throw out the idea just because you're kind of scared about how to do it. Okay. Number 8 is how long do you need to keep your financial records? That's the same as your receipts. I would keep them for 7 years, put them in a plastic box, label them with what year it is, and then just store them. And then something fun that me and my clients do is on the 8th year, we sometimes have a bonfire and we burn them. And there might be alcohol involved and there might be fun stories and a little but really we just have a good time and we burn them. And then basically you're just kind of refreshing and starting a new year. And I just find that something fun to do. A lot of my clients become my friends. They become people whose kids' birthday parties I attend. So with that close relationship, it's kind of fun to throw the paperwork in and burn it. It's also fun to review that paperwork and to see how different your business has changed 8 years later. And it's very humbling. And there's a sense of gratitude when you see where you've came in 8 years from where you were. And you also get to review some of the silly decisions you made, because I've made a few of those and they're fun to review and then burn them and let them into the universe. Number 9, what happens if you use your business card for personal purchases? It's not the end of the world. Whether you're a sole proprietorship or a corporation, it's not the end of the world if you decide to accidentally use your business, like whether it's an accident or you purposely don't have money in your personal account, so you use your business card. It's highly not recommended, but it's not illegal. You're not going to get in trouble for it. Um, Depending on the type of business you are, it gets labeled a different way, basically in your books. It's very simple. So don't ever beat yourself up if you do it. Just try to build healthy habits not to do it and try to really keep that money separate. Number 10, how do I know if it's an expense as a business write-off? This is another one that there's no clear-cut definition. And I'm going to apologize for anybody on the call that loves the government or loves CRA. I don't. I respect them. I'm very honest. I choose to live in the country of Canada, so I have to abide by the rules and regulations in which the government has decided we get to live by. But I don't love them. I think we pay way too much money in tax. I try to claim every single thing I can without stepping over the line, because if I could pay them less money, I'm happy. However, when it comes to business write-offs, it really depends on the type of business you're in. Now, there are universal business write-offs. So things like, office expenses, computer paper, computers. There's things like your advertising, your promotion, your marketing materials. Those are business write-offs for every type of business. Now, there's other businesses, like if you're a real estate agent, you can sometimes get away with like maybe writing off your nail appointments or your hair appointments. Sometimes you can get away with that. I personally, that's not something I choose to write off because I work from home on a computer. So it really, if the government asked why I needed nice nails, I can't really justify that. I can't really, So it just depends on the type of business you're in. Carpenters get to write off their massage therapy appointments and their chiropractic appointments because it's basically like an expense that they incur by doing a manual labor job. So it really depends on the type of business you're in. Now, CRA does have a website where they do have a list of business expenses, and then they have hyperlinks, so it goes into detail. So you can look at that if you'd like, or you can reach out to a bookkeeper or an accountant, tell them what industry you're in, and they can actually give you a list of different ideas for expenses of things you can write off. Business fees, expenses, all of your POS system, your bank charges, those are universal things as a business owner that you get to claim. Your vehicle expense, your home office. Like I personally write off about 20%, 15 to 20% of all my house expenses as a business write-off. So those are things that you can use as a universal business that has a home office, okay, to help get your taxes down. So next up, we're going to talk about tracking expenses in detail, and we're going to talk about the softwares that I choose to use in my business and why I choose to use them. So real quick, I'm not paid by either one of these companies, but these are the two companies that I use that I have found extremely beneficial for my clients. So Intuit QuickBooks, I do not recommend QuickBooks Desktop. I do, however, recommend QuickBooks Online. It is very user-friendly. I would highly recommend you get help with setting it up. Otherwise, you might potentially screw it up. So I would recommend you invest in getting somebody to set it up for you and then maybe give you some tips on how to maintain it day to day or month to month. I highly recommend an accounting software. Now, the spreadsheet I'm going to share is great if you're a very small business. And if you just have, 20, 30,000 a year in revenue and you just want to keep track of your expenses, the spreadsheet I share will be absolutely helpful for you. If you're into tracking HST, and so if you make over $30,000 in the province of Ontario, you need to register for HST. And I would highly recommend you then move up to an accounting software because your accounting software will actually track all of your HST for you and put together your report for you that you need to submit to the government on filing your HST. So it actually makes your HST returns very, very, very simple. Okay. The other icon you're going to see on the screen is Dext. So Dext Prepare is a receipt management software that my company utilizes, and I highly recommend people. It is an expense to your business. Now it is a write-off. However, the really cool thing about Dext is the automation that it uses, and it integrates directly with QuickBooks Online. So what that means is you actually have an app on your phone, or you can log in on the web browser, and you can upload all your receipts. And then you literally can pick what category. So let's say you uploaded a Staples receipt. You can say, okay, here's the date. I bought it from Staples. And then you can put it's office supplies. Here's what I paid. Here's the total amount. And then you hit publish and it posts into your QuickBooks for you. Done. You're done. Your expense has now been counted for. And then in QuickBooks, it'll automatically put it on your profit and loss report. And it does all these handy things for the accounting process behind the screens. So it is that simple. And this is the thing that I really want to get across to everybody on the call is I'm really good at what I do because I have a lot of experience, but it doesn't take a genius to do your bookkeeping. It doesn't. You can learn. You can have simple processes that you follow on a regular basis, and your bookkeeping can be something that you can do yourself if that fits into your business model, and it's not going to be something that you need to dread doing. Okay. And so I highly recommend utilizing software to save you time. You also get the business write-off. And then at the end of the year, you just have to provide these records, like a copy of QuickBooks. You just add your accountant to it, and then they get access to everything you did. The other really cool thing I love about Dex, which has been transformational for my clients, is when you publish an item through Dex, so you publish a receipt, it actually attaches a PDF or a JPEG in QuickBooks of that receipt. So now you have a digital copy of that receipt. So if you lose it, you still have a digital copy and it stays in QuickBooks forever. Meaning that if you ever need to see it again, let's say you need to return it, let's say you bought something and you have to return it and you can't find the receipt, you can go into QuickBooks, you can print it from QuickBooks, and then you can use that and take it back to the store. It's also really handy for your accountants. So if your accountants have questions at year end, instead of you having to find things or explain things to them that maybe you don't remember, because I don't remember what I did last month, you could actually just give them access to your QuickBooks. And if there's attachments in your QuickBooks, they can see everything. And then they can just do what they need to do on the back end without having to bother you. Or I shouldn't say bother, but take away your valuable time that you need to invest in your business. Okay. So these are two softwares. Now there's tons of accounting software out there. There's Sage 50, there's Xero, there's programs like Wave, like there's programs that people download to do their like booking and their invoices that also have some accounting opportunities. However, I would highly recommend a software like QuickBooks Online that is cloud-based. You can log in from wherever. You can connect your bank feed. So it makes matching and categorizing transactions really simple. And you can also do all your invoicing in it. It does your accounts payable and your accounts receivable for you. So it tracks who you owe money to, and it also tracks who owes you money. And then it's honestly will revolutionize, like it'll revolutionize what you do in your business. You would be amazed at what implementing, and a QuickBooks software is like $25 a month. It's not a huge investment into your business. If you just need the basic level of subscription, and if you don't have any payroll, it's very, very affordable as a business owner. So yes, I will share the Google Doc in the chat at the end. And then the last thing that I really wanted to focus on before I open it up for questions is I wanted to talk about financial reports and why they're important for your business. So if you're currently doing it yourself and you don't have the ability to create these reports, or if you have a bookkeeper or an accountant and you're not getting these reports on a regular basis to review them, I would highly book conversations either with yourself as to why you're not doing it, or with your bookkeeper or your accountant as to why they're not providing them to you. The first two are super easy. The third one takes a little bit of work. So the first main financial report is your profit and loss statement. That profit and loss statement is going to basically simple. It's going to take your revenue, take off all your expenses for your business, and it's going to give you your net profit. So let's say you are a construction business, because for some reason, I think I should own a construction business. I think they're great. So let's say you build a house and you charge a client $1 million for that house. Underneath that, you're going to have all of your expenses. So you're going to have your sub trades, you're going to have your permits, your fees, your payroll. All of that is expenses that are against that revenue. And the net profit is the amount of money you actually made. It's the amount of money you have to pay taxes on. Okay. Now, profit and loss is also known as a revenue statement. And a revenue statement is normally, or an income statement, is normally typically the one most business owners look at. The thing they don't tend to look at is what's called a balance sheet. Okay. A balance sheet in your business is your assets minus your liabilities, gives you your owner's equity. And what that means is when you have your assets in your business, that's your physical bank accounts. But not only is that your physical bank accounts, but it's your equipment. So let's say you own that construction company. It's going to be your tools, your saws, the things that cost you a ton of money. Maybe you have trucks, work trucks. Maybe you have an office, like you have a work, like a showroom that you pay rent. That's an asset. If you rent it, it's an expense. And if you own the building, it's an asset. So as a balance sheet, it's really important to review that because it's going to show you all your assets, the things that make your business worth money, but it's also going to show you your liabilities. And your liabilities are loans. Did you, do you have a small business loan? Do you have credit card debt? Do you have a line of credit for your business? Do you owe anybody else money? That's what your equity, like your liabilities on your balance sheet is going to show all the money you owe people. Okay. Now, both of these reports are incredibly important. They're incredibly important to review. But the third one that kind of takes your profit and loss and your balance sheet is a cash flow statement. And like I mentioned earlier on, I talked about a profit and loss report is not going to tell you how much money is in your bank account. It's going to tell you how much money you made. A balance sheet is going to show you your equity in your business, and it's going to show your money in your bank account minus your liabilities, but it's not going to show you your cash flow. So your cash flow is a report showing the money coming in and the money going out, when it happens, how it happens, and it's going to really show you how much in and out every single month. So let's say I go out tomorrow and I buy a new computer, and that computer is going to cost me $1,200. I cannot expense that computer as a business owner. What I can do is add it to my assets on my balance sheet. So any expense that you purchase that's over $500, that's not a consumable. Okay. So if you spend $1,000 on advertising, that's an expense to your business, a direct expense, and you get to write off 100% of that in the first year. But if you buy a computer, something that's probably going to last you 3 to 5 years, nowadays, hopefully 3 if you're lucky. But if you buy that computer and you spend $1,200, you can't write off that whole $1,200 in year one. You have to do what's called depreciating it. So that $1,200 doesn't come out of your profit and loss report. It comes out of your bank account because you pay for it, but it doesn't come out of your profit and loss report. What it does is it shows up on your balance sheet as a piece of equipment that gives your business assets. It gives your business equity. And then over the next 3 years, your accountant or your bookkeeper will depreciate that asset until it's worth nothing. So you can't look at a profit and loss or a balance sheet and truly see the health of your business. You need to look at both along with a cash flow statement. Now, QuickBooks Online has them that you can make your own cash flow statement. So you can review it in QuickBooks. You can also use a spreadsheet. I personally, for my business, literally just look at my bank account and I can pretty quickly see my cash flow for the month just by looking at my bank account statement. So those are the 3 main financial reports that I would highly recommend that you utilize. If you have a bookkeeper or accountant, ask them to create those for you or, send them to you on a regular basis. As most of my clients get their profit and loss statement on a monthly basis, and then they have the ability to review it. But then they also have the ability to then book time with me to ask questions and to learn more. And when it comes to empowering yourself with bookkeeping, it doesn't happen overnight. It's going to take time. It's going to take effort, like anything else in your life. The things that are worth having don't come easy. They come with hard work. They come with commitment. They come with discipline. There's no golden nugget out there. You're not just going to hire somebody and all your problems are going to go away. You're going to have to invest some time and effort into your business and to learn some things so that even if you do outsource your bookkeeping, that you know that you have confidence in what your bookkeeper is actually doing for you and that you're able to make business decisions based on the information that they provide you. And then last but not least, I'm just going to share a little bit of information on what we offer. So my company, like I said, I've got 3 part-time employees. One's my sister-in-law, one's my brother, and one's my best friend. So I am very fortunate that I get to build a family business where, as much as they frustrate, pardon my language, the shit out of me some days, and it makes it very hard to work with them some days, there is nothing more rewarding than knowing that we're all building financial stability and financial independence and building what we consider our success and our dreams all together under one company. It's made me level up. Being an entrepreneur and having employees makes you actually start to grow kind of self-aware. build some self-awareness, and then that becomes, you level up in your business. But right now, my company currently offers 4 types of services. So we offer done for you services, which is month to month bookkeeping. Basically, we onboard you, you submit your paperwork, we then do all the bookkeeping on the back end, we send you your reports, and it's a fixed monthly price every single month. When it comes to bookkeeping pricing, I highly recommend you find somebody that does value-based pricing or fixed pricing. And what that means is they provide you with a scope of work and a contract outlining exactly how much it's going to cost you for the year. And the reason I recommend that is because if you're a seasonal business and you have ebbs and flows in your business, like most businesses have, peak times. Cheyenne taught me this week that we all have peak times, downturn times, and plateau times. And with that, that means your cash flow fluctuates. So if you hire a bookkeeper that offers value pricing, it means that they're going to give you a monthly price that's going to stay the same every single month for the whole year or for the length of your contract. So if you sign a 1-year contract with them, the pricing will likely not change unless your business drastically changes. Like if you triple your revenue, you're likely going to have to pay more for your bookkeeping because it's more work. But that allows you as a business to have fixed expenses. Next up, we offer QuickBooks training and setup. So if you're a business that's looking to maybe implement some software, you can actually pay our company. You get one-on-one calls with me. We'll actually set up your QuickBooks the way that you need it to run for your business. It's not just cookie cutter. And then I can actually give you some training over a 3-month period on how to do your bookkeeping. And then we offer catch up and clean up. So if you're a business owner that hasn't maybe been taking care of your bookkeeping at all and you're a couple years behind, we actually offer catch up and clean up, no judgment at all. And there's discounts that are included in catch up and clean up because we can do it a lot quicker. So it's a little cheaper for you. You get a nice discount. And then we also offer some bookkeeping coaching. So one of the things that I've been moving into is more that training and that coaching. So maybe you have the software, maybe you kind of know what you're doing. You just need a one-on-one call once a month to pick somebody's brain. We actually offer that. We can create packages for you depending on, and then potentially, not to jinx it, but in the new year, there might be a rollout of an incredible program that's going to offer you marketing and bookkeeping support. That is going to be a partnership between myself and CO Marketing, the wonderful Cheyenne that's on this call. So that is something that might be happening in the spring if we can figure out how we're going to run it. So that might be another option for you if you're wanting to learn, how to do your marketing and your bookkeeping all under one window. There might be some opportunity for some support there. So like I said, if you're looking for help, intake form on the website, I'm happy to book an introductory call and answer any questions. And if you want to do it yourself, you can send me an email. We can put you on a wait list for the program that's launching. And I know Wendy, who is also on this call, Wendy Harris. She is an incredible virtual assistant if you're ever looking for one. She is on this call. She posted all my social media links because I was not prepared, ready for that due to this cold. So I texted her freaking out right before the call, and I know she posted it in the chat. So feel free to follow me on Instagram, Facebook, or LinkedIn. And then other than that, I would open it up to any questions.
Fantastic. All right. So I'll let you take a sip of your tea there. You did a great job, Katie, with that cold that you're fighting through. I know there were some questions in the Zoom chat. So if you'd like to share your question once again in the Zoom chat, I wasn't writing them down. Or if you want to go off onto mic, as long as you keep your question very succinct and don't tell us too many stories, especially if it's a very specific situation. That's where those calls come in. Joanne, over to you next.
Hi, I really enjoyed your it was not like a boring bookkeeping. My question is, though, and I keep getting different things, is so you lose your receipt, and can you use your credit card or your bank statement?
So great question. So you can. So you can definitely do that. Like if you can use your credit card statement and say, okay, I paid, let's say it's like MailChimp and you didn't get a receipt through email and it's $25 or something. You can still write it off in your business. The only risk that you run is if you ever get audited by CRA and you can't provide some kind of documentation. Now you could try to give them your credit card statement. And here's another thing about the government real quick. It depends on who you get. So every CRA representative is different. Some of them are wonderful. Some of them I've hung up on before because I haven't wanted to talk to them. So it depends who you get as an auditor for your business. One CRA representative might be like, oh, that's fine. I'll use your credit card statement. And the next one might be like, nope. And they might just deduct that off your expenses for the year and make you pay income tax on, because every expense lowers your profit. So if you deduct that, then basically your profit goes up and you would owe more income tax for that year.
And I like the idea that you said if you can save them digitally, then we don't have this problem, then that's a solution for all of us.
Yep.
Yeah, I love it. Hope that answers your question, Joanne.
Oh,
DA is asking, wondering if you have recommendations on which bank, which bank we should choose to open our business account. Oh, yeah.
Okay, so I have to say I'm a little biased. I don't love, full transparency, I also don't love big banks because I think that they make billions of dollars every single month, keeping us in debt by offering us credit cards and lines of credit and taking advantage of us. However, I have an incredible partnership with a wonderful man named Matt Williams. He is the small business banker with Scotiabank based out of Belleville. However, he can help anybody in the province of Ontario, and he can actually open up your bank account online and send you paperwork and send you everything in the mail. Well, once the postage strike is over. He can send you everything without having to physically go into the branch. The reason I highly recommend Matt, personally, if you're somebody that's struggling with debt, I had a business bank credit card, and it was like 25% interest. And Matt took my entire credit card, transferred into a line of credit, didn't cost me anything, and now I'm paying 7% interest. So it's saving me a lot of money. And that was something most people that I've worked with at the bank aren't looking for solutions like that. They're just trying to sell you products. So I would highly recommend maybe Scotiabank. And you can reach out to me and I can actually do an email introduction with Matt. He's fantastic. He's very laid back and fun.
Love it. Also, great question for the We Can Facebook community. If you're a part of the We Can Facebook community, feel free to post, see what others are also saying. Thank you for that. Oh, Teresa says Dex sounds great, but doesn't QuickBooks have the same function through Snap Receipt?
So it does. Most bookkeepers, if you chat with them, they won't recommend Snap Receipt. It doesn't have the automation and the flexibility that Dex does. Now you can definitely use it if you're a small business and you only have like 10 receipts a month, then absolutely you can utilize that function. That's not a problem. And it will attach to it will attach a copy in the attachments in QuickBooks. I just recommend Dex because it's just a separate program. So you can log in and all of your receipts are showing there. And there's a lot more functionality in regards to setting up like supplier rules. So you can literally set up the automation to fill it in for you. So then you don't really have to do anything. You can just hit publish.
Okay, thanks. Miriam asks, what's the difference between using QuickBooks Online and the app?
So they're the same. So QuickBooks Online and the app are the same. I would just recommend, so if you're looking at QuickBooks Online, do not buy their lowest package. It's called like their self-employed. It's like $6 a month or $8 a month. I would not recommend it. And the reason I would not recommend it is because there's not as much functionality when it comes to pulling reports. So make sure you at least get the lowest one, I believe, is the Essentials or Easy Start. There's Easy Start, Essentials, or Plus, and then there's Advanced. So there's 4 different levels of QuickBooks Online. And then there's the self-employed, which is separate. I would just make sure you either get the Easy Start or one higher, depending on what you need for your business. No matter which one you get, you can actually log in on the app on your phone. So I can log in and see all of my clients on my phone. So it's interchangeable. I would just recommend if you're doing reporting, go online and use the web portal because there's more functionality.
Okay, thank you. Now we're in Ontario and I know you are, Katie, but Lauren is saying as a sole proprietor, should she pay both provincial taxes and federal? She's asking because she's in Manitoba. Not sure if you could answer that question.
Yeah, so in Ontario, because we have HST, it makes it simpler for us. However, it depends on what business you're in. So you'd have to check with your local. Like I know, for example, like I have a client that's in BC and they have to pay GST and PST, but they only have to pay PST on certain products because it's the provincial tax. But QuickBooks, the wonderful thing about that is you can actually put your province and your tax codes, and it'll keep track of them. If you have 2 separate tax codes, QuickBooks will keep track of all of it for you and will actually calculate what you owe both the federal government for GST and the province.
Great, thank you. Martha is saying, if you lend the business money, are you able to withdraw money from the business to repay the personal loan anytime? You mentioned earlier that you can't pull money to a personal account.
Yes. So if you're a sole proprietorship, it wouldn't be deemed a loan. If you're a corporation and let's say you're startup and you put 20 grand into the company as startup, that $20,000 is what's called a shareholder's loan. So it's the shareholder of the corporation lending the money to the business. And at any point that you pay yourself back for that, that is not personal income. You do not get taxed on that. It is you repaying yourself for the investment you made in the business.
Okay, thanks. Joanne asked another, there's also, of course, QuickBooks Desktop, which her accountant uses. So should she use Dex for her receipts and send that to him? Because he uses the desktop version.
Yep. So one thing I would recommend is ask your accountant as to why, like side note, ask your accountant why they're using QuickBooks Desktop. QuickBooks Desktop makes it harder for you to have access to all your reporting, and you're basically relying on them to have it. If you have QuickBooks Online, you have full access to all of your data and you own your data. QuickBooks Desktop means your accountant owns your data, and depending on the type of person they are, if you ever split ways with them, you may not get a copy of that. So I would highly recommend you maybe think about so if it's your husband, Joanne, then ask him. Then that's fine. You can use QuickBooks Desktop. Dex actually integrates with over 30 accounting platforms. So when you create your Dex account, you can actually integrate it and link it to whatever you're using. So yes, it will work with QuickBooks Desktop.
Okay, great. Okay, I think I've been scrolling, getting the questions, folks. So you'll have to ask the question again if you asked it way up top, because I haven't seen it. We have 15 minutes left, so we do have still time for questions. I know some of you are running to other meetings. No problem. I'm not sure who iPhone. Just let me know, iPhone, by the way, your name, because I like to keep that for my records. That's aside. Asks, as a small business that is incorporated, how do I calculate my taxes to set it aside for year end? I don't qualify to pay for HST yet. Ooh, good question.
Okay, so as a corporation, you under $500 million in revenue, which I assume all of us fit into, you are going to pay roughly 13.5% on your net profit. So as a corporation, you have to consider personal income and corporate income. So let's say your company nets $20,000, you're going to pay roughly 13.5%, depending on your accountant finding you any other additional tax write-offs. So if you calculate 13.5% on your net profit, that's roughly what you'll probably owe in corporate taxes for that year. But then you also have to consider, what did you pull as payroll? So did you pull money as a salary, which you had a T4 for, and you've already paid the income tax on, or did you pull money as a dividend, and a dividend you have to pay taxes on at the end of the year? Now, on the topic of taxes, for anybody that's on this call, I do highly recommend. There is a tax calculator online that is created by Wealthsimple. So it's called Wealthsimple Tax Calculator. And you can actually put in the province in which you live and your self-employed income. You can also put in your RSP deductions, anything for taxes, dividends, and it'll calculate roughly what you're going to owe in income tax. So you can kind of maybe do a little bit of strategic planning and then start putting some money aside.
Great. Any other questions that aren't super specific? You know, sometimes we ask specific questions that maybe would be best in a one-on-one call. And thanks to Katie for offering that option. It's amazing. Katie, option to put those things in the Zoom chat, because we do have people leaving the meeting. Do you have some of those files that you mentioned?
Yeah, absolutely. Let me go pull that.
Thanks, Jen.
Now I just have to learn how to attach documents. Oh, there we go. File.
Oh.
So I've just posted the one for do it yourself first outsourcing. It's just a PDF you can download and go through as an exercise for your business.
And also just getting some feedback that maybe the booking system that was dropped in there earlier doesn't seem to be working, but you do have Katie's email, everyone. Just reach out to her.
Yeah, so if you go to the website, there's actually an intake form. So the website's under construction because I rebranded, it's not done yet. But there is an intake form you can fill out, and it just asks a few questions and then asks your details, and it'll send it directly to me. And then I can reach out with a booking link, and then we can book a time for a call.
Okay, so do the onboarding one through the website instead. Thank you for that. Any final questions as we are nearing the lunch hour, at least here in Ontario? She mentioned you mentioned a spreadsheet. Was that also something?
Yep, I'm just finding it right now. And then I'll just share the link to the spreadsheet, and hopefully
notes that our weekend clients are incredibly amazing. Like today is just evidence, right? I mean, thank you, Katie, for not just sharing the value with us, but answering questions, providing templates, even the ability to check in. There's the other Google Doc for that. Thank you.
So there's the Google Doc. I just recommend that when you open it, make a copy, because if you don't, I'm going to see anything you put into it. So just make sure you save a copy to your own Google Drive and then use it. And if you have any questions, feel free to reach out as well.
Excellent. Great. Okay, I'll just pause for any last minute questions.
So I do see that Liz, who is a wonderful woman, that I happen to know, she mentioned about a sole proprietorship or a partnership, which is better for a husband and wife. So it really depends. A partnership just means that it's two people together and on the registration with CRA, which means at the end of the year, you have the ability to split the profit. So let's say your profit's 50,000. You can actually then put 25 to the wife's social insurance number and 25 to the husband's, or you can do 80-20, 75-25. So it really depends on your personal, like if you have a husband that makes a bunch of money, you might not want him to own 50% of your partnership because he's going to have his T4 income and then he's going to get his self-employed income on the top and he's going to pay more in income tax. So it really depends on each one of like what your business is like and your personal tax situation.
So is that a good question for an accountant as well, just because they would know the family income?
Oh, absolutely. And they would, before you register, I just would recommend reaching out to somebody like before you register for a business. You can also change it. So like if you become a partnership and you need to switch to a sole proprietorship, it's forms that an account can fill out for you.
Yeah, and that's a great question. You start out as a sole proprietorship, which many do, and then you can always incorporate later, right? And then, so it's not you're not, you know, at least I'm speaking for Ontario, you're not like married to that forever. Yeah. Okay. All right, Katie, I don't see any more questions. I want to just thank you on behalf of all of us, everyone. This will be posted to our YouTube channel later today. If you don't have access to that, just send me an email and I'll send you a link. Thank you so much from all of us, Katie. And go give that baby a hug and a kiss because I'm sure she misses you. Fantastic. Thank you so much for being a part of this, everyone who joined us today. Have a wonderful day.
What happens? What happens when your receipts start deleting or erasing?
Oh, okay. There's a last minute one, Katie. What happens when your receipts are deleted or are erasing?
So Gloria, what do you mean by explain a little more?
Well, I have a receipt here, but it's starting
Oh,
to
it's actually getting
faded.
Yeah.
So that right there is also the problem with not staying on top of your bookkeeping on a regular basis because they're all thermal paper, which is where taking a picture, or you can also scan them. If you don't want to use Dex Prepare, you can actually scan them as digital documents and save them that way. You can still use it. If you can see the total, I would still write it off as a business expense. You just run the risk of if you ever get audited, not being able to provide that receipt to the government.
So take a picture of it right now.
Katie,
whenever I can.
On top of our books so that we don't have erased receipt. But yeah, it's happened to all of us. Me too. All right. Thanks,
Thank
everybody.
you.
Okay, take care.